Hello and welcome back to cryptocurrency trading, mastering scalp trading strategies by Wealthy Education. In this video, I'll take a look at how to use the stochastic. There's another thing that I would throw on top of a stochastic, and that would be your moving average. I like looking at both, and in this case, I'll use a 9. Or you know what? I'll add another one. Because it's going to automatically open it up at 9. Okay. Now I'm going to add another one. And this one, I'm going to make 20. So what I want to see how choppy it is? Well, in this case, your moving averages are telling you, this is basically a range. So notice how this one was previous resistance. It's now support. And notice how we've bounced from there, bounced from there, bounced from there. Well, this is where the stochastic oscillator comes in. Pretty flat action. Crossover there, you're a seller. Try to reach down to this area or close to it. You get a cross there, you're out. You get a cross up there, you're a seller. Down here, you cross right before you get down to that area, you close out your position. Your stop loss just goes a little bit behind the candlestick that you enter from. Now, you can, in theory, trade back and forth both directions. That's not really advisable, though. What you want to see is like consolidation like this in a trend. So we definitely had a downtrend, and you want to continue to short. It's not that you can't do both. It's just that statistically it tends to work out in your favor more. So back to Bitcoin. Sideways action here. See this oversold condition? That was a buy signal, and we did in fact reach this area up here where we crossed over. So again, you're looking at this area as resistance, as a potential target where we crossed over. And your support, you got in, look on this candlestick, so your support just goes a little lower. Maybe, just a couple dollars lower there, and you can see that you had a decent turn of things. Now, this is interesting. You can see that we're sideways with a little bit of a negative tilt. So you recognize that you're breaking through support. Might be time to go short Bitcoin. Crossover in a very overbought condition right before we fall drastically. And we didn't get a crossover until we got down to here, but you can see what that led to. There's a lot of ways that you could have played this. You could have said, all right, well, this is an area that would be interesting. And not only did we reach there, but once we broke through it, we really kind of fell apart. So definitely worth paying attention to as well. So let's go ahead and take a look at another one. Solana. So this is a market that is slightly negative, but somewhat sideways. This is sideways here. This is the kind of sideways action that'll just chop you up. However, recognize that there was a huge bounce from there on a lot of volume. So it's not surprising that that ended up being support. Buy signal here, buy signal there, get out there on the crossover. On the other hand, you could have just said, all right, well, I'm going to buy it down here at this buy signal, and I'm going to aim for this because it's here and here. I'm going to aim for this previous swing high, and that worked twice. Where do you put your stop? You put your stop loss underneath your candlesticks there by, probably 2 or 3 cents. Pretty quick smash and grab type of trade. These are pretty straightforward ways to trade. Moving averages confirm that you're going sideways, that you're losing momentum, and then that's where the stochastic oscillator takes over. When the stochastic oscillator stops working and the moving averages start to slope up or down, that's where they come into the picture. In the next video, I'll take a look at something called the MACD, which is another oscillator.